Welcome back. In this video, I'm telling you everything you need to know about Palantir stock's March meltdown, which is upon us. So what exactly is happening? Well, this month, Palantir stock has lost 15% of its substantial rise so far into 2024, from $27 back to under $23. So the question is, what is going on? When is it going to turn around? And what is driving this downward momentum? Well, first of all, of course, Palantir, we know this quarter missed the S&P 500 inclusion, meaning that it is still pending and outstanding, and this catalyst is certainly one of the major ones for the stock, and I think the biggest one, albeit it is still 2.5 months away at this point before we can see a re-examination of Palantir being entered into the index. So all that to say, I think Palantir's largest catalyst is a few months away, and that's why you're seeing the stock cool down. There's not an immediate reason to own it right this very second, and that's why I think there's been some substantial profit taking so far this month. But more immediately today, we've had some analysts continue to miss the story, and this is driving some headline risk, some downward momentum. Palantir is, quote, egregiously rich valuation draws downgrade to sell. I'm going to show you exactly why this is misinformed. This is a misinformed take in a moment, if you bear with me. But first I want to dive into exactly what this analyst has said, cutting the AI software company's rating to bring it back to reality. So let's see exactly why they downgraded the stock, mainly on valuation. On the back of this unprecedented generative AI hype cycle, Palantir surged in 2023, and the stock's upward trajectory has continued in 2024, or at least it did until the last few weeks, leaving the company with what we view as an egregiously rich valuation. So you'll recall in the last few videos, I've actually said I think Palantir finishes somewhere between $20 and $30 per share in 2024. I have been in the camp of, I think this is a consolidation year for Palantir stock. I think the fundamentals continue to increase and improve, but I wouldn't be surprised if Palantir finishes low 20s or even mid 20s. I don't think this is an explosion year for the stock, and I've been clear about saying that. A lot of people disagree, but so far that seems to be proven correct. Of course, there is still a lot of the year left to happen. So a little bit more on the story here with this downgrade. While Palantir remains well positioned to benefit from the long-run AI trend, revenue from government-related contracts have been lumpy, execution spotty, and its valuation is now excessive, even as a potential recession looms. We believe the darkest days of this economic downturn are ahead of us. Setting a $20 price target, setting a $20 price per share target for Palantir. That's more than $4 below where the stock traded on Wednesday, but now we are much closer to that, now that the news has gotten out and this analyst has influenced the stock price. Overall, Palantir stock has seen a meteoric rise, but now it's time to return to reality. That's basically the summation of this analyst's note, and it seems to be having an effect on Palantir, with the stock down 6% today, so it is resonating at least somewhat with the market. Now I'm going to tell you exactly why all of this is fairly incorrect, proving and backing it up with some data. But first, just overall, what is the overall analyst consensus? Because we can't just rely on one analyst to see what they're thinking. Overall, we have 20 ratings of Palantir stock, 20 firms that cover it and issue buy, sell, hold ratings. 15% are buy ratings, 10% overweight, which is very similar, hold 35%, and 10 and 30% underweight and sell, for a mean target price of $20.27, implying a 12% downside. So that's just level setting where we are. That has been rising with Palantir stock, and I like to think of analyst price targets as a moving average of the stock. They tend to follow where the stock has been. So not too clear of an indication, but nevertheless, I think the target itself is less important than the thinking behind it. So let's debunk the thinking behind this. So this is some screen grabs I brought together to show you Jefferies' research here, which is their software comp sheet sorted by market cap, and this is for large cap software companies, of which Palantir is a member. And so you see Palantir highlighted down there at the bottom. I want to just call your attention to price to earnings and EV to free cash flow. So these are two metrics and multiples that we're using to refute the claim that Palantir is egregiously overvalued. So you'll see Palantir's price to earnings for 2024 is 71 and for 2025 is 59. So let's see who else has a price to earnings ratio above Palantir's 71. Well, it looks like CrowdStrike has 80 and 65 times, which is well above Palantir's, and as well Atlassian, another software company that you may or may not have heard of, 74 and 55, which is pretty similar, if not a little higher than Palantir, and Datadog, 83 and 67 times, which once again is way above Palantir. Believe it or not, on a price to earnings basis, it's not like Palantir is by far the most expensive large software company, right? And you have to take this with a grain of salt because Palantir very much so may grow much faster than these companies as well. And you just have to consider that the average is 48 times and 40 times respectively, and the median 39 and 34. But these large companies are much more mature than Palantir. You compare Microsoft at 2 trillion to Palantir at 50 billion. It's not really the same comparison. And let's just briefly look at EV to free cash flow, do something similar. It's going to be very similar as what we were saying before, but enterprise value to the free cash flow that Palantir is generating, 58 times in 2024, 47 times in 2025. So let's look at this. 58, Snowflake, very similar valuation, and we know they've been struggling recently. CrowdStrike once again, and we'll see if there are any others. It looks like Datadog is more expensive. It is really misleading when you hear these analysts saying Palantir is egregiously overvalued before you actually look at the numbers. Now, of course, they're saying that from the standpoint they believe Palantir is going to grow at 20%. And if Palantir grows at less than 20% per year, sure, the stock's going to stay stagnant or go down. But what they're failing to understand is you can buy Palantir at $20 and see them grow at 25, 30, or even more on a percentage basis and see a significant increase in the stock price as a result. So my personal belief is, regardless of the fact that I think the stock is going to be pretty flat this year, that buying Palantir, even at, let's say, a next year's ratio for price to earnings of around 50 times, I think that is going to be well worth it in the long run. So I'd love to know what you think in the comments, and if you're buying this Palantir dip. Until next time.
Because companies know that if they do not harness AI, they're going to lose out competitively. So we're seeing, you might say, an arms race with NVIDIA. That's the hardware side of it. There will be a software side of it. Palantir is a good example on the software side. So is UiPath. But if you think about it, any company with proprietary data that takes AI seriously and has deep domain expertise on whatever the business is, should be able to use AI and drive productivity gains up dramatically.